Welcome to the New York State Association of School Business Officials webinar. Today's program is Monthly Planner August edition, Tax Warrants and Collections. Your host for today's program is Matthew Darius, Senior Staff Associate for Professional Development for New York State ASBO. Operator assistance is available at any time during this conference by pressing #. A question and answer session will follow the presentation. You may send chat questions at any time during the presentation using the chat window indicated by a speech bubble icon located to the right of the presentation. I will now turn the call over to our host. Matthew, please begin.
Thank you very much. Good afternoon, everybody. My name is Matthew Darius with New York State ASBO, and welcome to Tax Warrants and Collections. Just a brief introduction for you. Generally speaking, school districts in August must prepare to issue tax warrants and plan for the fall collections. Accuracy of these depends on the receipt and information from a variety of agencies, and attention to the details that go into the calculations. We are very lucky today to have Grace Chan, the Assistant Business Administrator for Port Washington School District, Laura Lindsley, the School Business Executive from Whitney Point School District, and John T. Powell, Certified Public Accountant from Great Neck Central School District. At this point, I'll turn it over to John, and I hope you all enjoy.
Thank you, Matthew. Good afternoon, everyone. I'll begin with slide 1, which is actually slide 2. The first slide is the New York State Office of Real Property Services webpage. However, beginning with the determination of the tax levy, as you know, this begins during the budget process. How it's determined, the plug number on your revenue side of the budget. Most of us in school business administration, we start with the development of the expenditure budget. We compile all of the different functions and appropriation line items and come up with a total expenditure budget. And from that expenditure budget, we determine those revenue sources that will finance or fund those expenditures for the coming school year. So we begin by taking those total expenditures and subtracting from those total expenditures those known revenue sources, which for most of us in New York State are state aid, which depending upon the demographics in each school district, those will that will determine how much state aid each school district gets. Then there is the federal aid component, which a lot of us saw this past year with the ARRA money. And then there are our other revenue sources, such as interest income, tuition from other school districts. There could be donations, registration fees from recreational and after-school programs. After totaling all of those revenue sources, you subtract that from your expenditure budget, and you come up with a property tax levy, and that is the balance that has to be raised by way of property taxes. You should always review your revenue estimates prior to setting the levy and make any final adjustments. You don't want to be in the position of being too conservative on your revenue estimates, because you could be criticized by raising too much in property taxes. However, historically, you should look at how your revenue sources have been realized in prior years, and you would follow that as a guide, and also incorporate any news in terms of those sources that comes about throughout the year. So what you would do is after you determine your revenue estimates, you would again, prior to setting that tax levy, again look at those and make any adjustments prior to coming up with that number, and then you communicate that to your Board of Education, which will make the ultimate decision on how much of the revenues are to be raised by property taxes. Going to the next slide, here's an example of the process. Starting up top, you see your proposed budget of $30 million. From that proposed budget, you're going to fund that with $2.5 million in state aid. From that, you will also fund it from $200,000 in interest income, and then another revenue source is your appropriated fund balance. And in this particular example, that is $1 million, resulting in a tax levy of $26,300,000 $300,000. Now, in the column to the right, you see a revised calculation. This is pretty much what happens when you come out with your budget in the springtime. In many cases, the state budget has not been passed at that point in time, so you do not know exactly what your state aid figure is going to be. Most of us use the governor's proposal or the executive proposal, which tends to be the most conservative of the estimates in the past that come down from Albany. However, in this particular example, you see the actual state aid figure dropping from $2.5 million to $1,750,000. And what happens is, even though the governor comes out with his or her state aid proposal in January, that number has to be negotiated between the Senate and the Assembly. In this particular instance, the governor's number tended to be the higher number, and what was agreed upon was a lower number of $1,750,000. And as you can see, all of the other revenue sources remain constant, so the only other revenue source that could make up the difference between the previous $2.5 million in state aid and the now revised figure of $1,750,000 is the tax levy number. It is again the plug number. It is the number that will balance the revenue budget. And now, after you determine what your tax levy is, you have to communicate that to the taxing authorities in your particular jurisdiction. And you have to determine if your school district is not located in one township or municipality, how much of that levy gets allocated to each one of those municipalities and townships. So what you have is once you determine the tax levy, you must divide that among the property in the different towns and villages. And that's done, how you do that is by an equalization rate. Now you spread, when your tax boundaries are located in more than one municipality, there has to be a mechanism on how that levy gets distributed to those different townships and municipalities. And that's where the equalization rate comes in. However, in certain areas of New York State, each one has their own different types of ways of distributing taxes. In Nassau County, where Grace and I are located, in addition to levying your tax, we have 4 different classes of taxes. Class 1, which is individual homes and any structures no higher than 3 stories. There's a Class 2, which is condos, co-ops, condominiums, co-ops, and apartment structures. Class 3 are your special franchises such as utilities, your cable companies, your telecommunication companies, your water distribution authorities. And Class 4 is everything else, which is retail, commercial, and anything that does not fall into those 4 classifications. However, for purposes of today's webinar, because just about all of our participants are upstate, I won't get into any more discussion on the 4 classes of property in Nassau County. However, what I will explain is what happens when a school district is not located in one municipality or township. What happens in that particular instance, again, you have to distribute it proportionately amongst the different areas that school district encompasses. The assessment of an individual property determines its share within a particular town or county. Districts that cross multiple boundaries must have a mechanism, again, to distribute the levy on an apples-to-apples basis. And that's where the equalization rate comes in. An equalization rate is that percentage of a market value that the assessor in that community assesses property at. There is no fixed percentage at which property must be assessed in New York State. Not all municipalities assess at the same percentage of market value. And again, school districts may not share the same boundaries as those municipalities. In my first job, I was fortunate. The school district I worked in only was located in one township. However, in my second position out in Suffolk County, the school district I was employed in happened to straddle 3 different townships. So there had to be a mechanism by which you could allocate the taxes of your school budget amongst the multiple towns that you're located in. Now the question is, what is an equalization rate? Again, it is the percentage of, the equalization rate is the percentage of assessed value to market or full value. And the state's measure of a municipality's level of assessment, again, is the total ratio of assessed value to the municipality's total market value. In this example, you can see this municipality assesses at 10% of market value, calculated as follows. You have $3 million in assessed value divided by $30 million in full or market value equals an equalization rate of 10%. Or put in other words, if you know what your equalization rate is and you know what your assessed value is, you can figure out what your full or market value is. You divide your assessed value by that equalization rate of 10%. So $3 million divided by 10% equals $30 million in total market value. A rate of 100 means property is assessed at 100% of market value. A rate of less than 100 means the market value is less than the assessed value. Again, why do school districts need an equalization rate? It's necessary to fairly distribute the property tax levy amongst the different areas that the school district is located in. As an example, we're going to give an example of a school district that encompasses 2 different townships or municipalities. We're going to call it District AB, and you're going to have Town A and Town B. Each of those towns has an assessed value of $10 million. The tax levy for the school district is $1 million. Since assessed values are equal, each town's share of the tax levy should be $500,000. You're figuring half of $1 million is $500,000. However, this would be incorrect because Town A and Town B assess at different levels of assessment. Town A's equalization rate is 30%, which means their assessed values are illustrated at 30% of their market or full value, while Town B's equalization rate is 50%, meaning they assess at 50% of market value. Therefore, following the illustration earlier, Town A's market value is $33.3 million, and how you calculate that, you take the $10 million in assessed value, dividing it by the equalization rate of 0.30 or 30%, coming to your $33.3 million. Town B's market value is $20 million, taking the $10 million in assessed value in Town B, dividing it by the 50% equalization rate, or $20 million in full or market value. Therefore, District AB's total market or full value is $53.3 million. Taking the proportions concerning that, you see that Town A's share is their $33.3 million in full value compared to the $53.3 million in full value, which is 62% of the levy would go to Town A, while Town B's share is 38%, which is their $20 million in full value divided by the total full value in the school district of $53.3 million, coming up with 38%. So therefore, multiplying the percentage or the allocation in each town, Town A would pick up 62% of that $1 million levy, or $620,000, while Town B would pick up 38%, or $380,000. Bringing the two together would be $1 million in the levy. And where this becomes tricky, if you have a community where the market values are moving faster than the other community, meaning the homes in that community are have a market value, if holding the other community constant, their market values are going up quicker than the other community, they're going to assume a greater part of the tax levy. As an example, back to our example of Town A and Town B, if the market value of property in Town A is rising faster than Town B, Town A will pick up a greater share of the tax levy. At this point in time in the presentation, I'm going to turn it over to Grace Chan, the Assistant Business Administrator in the Port Washington School District, which will where she will explain some of the different forms that have to be filled out, and Grace and I will return at the end of the presentation to answer any questions that you may have concerning today's webinar. Okay, Grace?
Hi, John. How are you?
I'm very good, thank you.
I think I need you to click on my name so that I could put the...
I did. You should... I'm sorry, wait a minute. Hold on 1 second. Okay, Grace, are you in?
Not yet. Okay, I see it now. Thank you. Thank you, John. Good afternoon. I just wanted to point out first about to review the due dates, and since John and I are down here in Nassau County, we do know that the due date is August 15th. I just want you to check it with yourselves upstate because I'm not sure if you have the same due date that we do. And then also, the required forms to send into ORFs are apparently different. There's like 4 forms plus a different one, the RP 6704, which I have on the next slide, that are available on the ORFs for the STAR, the School Tax Relief Reimbursement. But down here in Nassau County, we're only responsible for filling out 2 of the forms. And Laura, who was supposed to be with
Grace?
Hello?
Grace?
Yes?
I'm here. Sorry I was a little late.
That's okay. How are you?
Good.
I'm going to ask Laura to step in after I just talk about this area because she is probably more of the point person for most of the participants since it seems that most of them are coming from upstate. And I understand that upstate, for instance, Laura had sent us some spreadsheets that we are included in this webinar that you can download, and she was responsible for 4 counties over the spread of 11 towns. So I'm sure that many of you will be looking at her forms. So just back to this PowerPoint, we want to make sure that you look at the tax warrants and be sure which forms you have to submit and how many copies you have to submit them to. Okay. As I said before, there's 4 versions of this joint statement of school tax levy. The one that we're responsible for here down in Nassau County is the RP 6704A3. I looked at some of the forms that Laura filled out. It looks like she filled out the A1, the C1, and also the one that we're both filling out is the next one, the RP 6704B. All the versions of the forms are available on ORF, and I just wanted to highlight the attachments in the webinar that you're entitled to receive, and I actually numbered them 1, 2, 3, and 4. 1 and 2 are different versions of what we do down here in Nassau County, and basically they are the forms itself in Excel because the forms don't have any mathematical calculations. Each column is highlighted. When you get to download it, you'll see that each column is highlighted, and the worksheet on the bottom will tell you which form that particular worksheet is working on. And it tells you in the color coordination where I got my numbers, who I had to call. It's like so basic that way, and I'm hoping that that will help anyone who has never done this before because I use this form once a year, and I've had to write these little notes for myself so that I know where to get it the following year. On to the next one. The amount submitted to New York State for reimbursement will be paid directly to the district by New York State, and the district won't receive these funds through the local tax levy. This point, I think I'm going to just have Laura come in and speak about her spreadsheets. There's the third one that I had mentioned. 1 and 2 is Nassau County. The third one is someone who is in the Nassau County and Suffolk County line, so that was given to us by Paul. And then the fourth one is the one that Laura gave to us. The fifth one is just called Forms to ORFs. That's the one that Laura sent to us so that people upstate can look at how she prepares her forms for ORFs. And then the last one is actually the PowerPoint, which you're looking at today. So, Laura?
Hi, everybody. The first form that Grace is talking about is where I use the information that comes from the assessor's office. And for me, it's offices. I have 4 counties and about 11 townships that I'm dividing our school tax levy among. And this is where your equalization rate becomes a factor so that you're appropriating the right amount of the levy to each of the townships based on their valuation off of that equalization rate. So I always track what it was the prior year, what it is the current year, because those rates will change every year, and it helps to see how the levies are being affected or the tax rates are being affected by township. So the first few columns are directly off the reports that you get from your assessor's office, where it's, the valuation of the taxable assessed properties. The taxable for appropriation, we have some clergy properties that exemption, that $1,500 exemption, is added back to appropriate the taxes. Then that is the figure that is used and multiplied by the equalization rate to come up with the valuation to appropriate the tax levy. And I do this all on a formula on the Excel spreadsheet. So then it breaks it down so that each of the townships are equally taxed at the share they should be for the levy. Then it just breaks it down into the rate per thousand. This sheet is the sheet that I send back to each of the counties with the paperwork that they send in order to prepare our tax bills. I always send them this spreadsheet also so that, sometimes some of the assessors are very good at double checking to make sure, oh, geez, you picked up, a number wrong. I've had a couple of them actually look, and it's nice that they do spot check these for you. So it's always a good idea to send these back with them. And that information is what drives the STAR forms, those RP 6704 A1s, B, and then the C1. It all comes right off of that original spreadsheet onto these forms, and then these forms are then filed for STAR. Grace, anything else?
No, I don't think so. I think that pretty much covers it. Looks like we have a couple of questions on the chat room.
I'm not. Unfortunately, I can't see them.
Really?
No.
Okay, Grace, I can see two of the questions so far. We've got a question from Mary Gibson about what does it mean when the equalization rate on the Office of Real Property Services website is stated at 101.07. Mary, and to the rest of the group, I'm going to try to get you an answer. I have not, in my experience, ever encountered an equalization rate above 100.
Either have I.
Yeah, I will try to find out. As a matter of fact, I have somebody in my staff right now calling up to the Office of Real Property Services to find out exactly what that means, because that I don't know what that means at this point in time. So we will get back to you. We'll get your number and your contact information, and we will get an answer for you on what that 101.07. I'm actually grateful that Laura has not seen it either, or Grace, because I've never seen an equalization rate above 100%. There's another question from Cynthia Morrow, but I don't quite understand the question. Our due date in St. Lawrence County is about the same. I don't know what that is.
I think she's in getting the information to the counties. It seems most of the counties want the request the information back about August 15th.
Okay, I think she's making a statement to let the rest of us know. I don't know if any of the participants, the attendees, were able to download the attachments, because I think that's really where you might start when you have questions about how to do it in your own district. If you could access those and see the actual forms that we were filling out, we were doing the same thing, pretty much Laura, except Laura has a more difficult job being that she has 4 counties and 11 towns. And I don't think you have the same thing, Laura, that we do down here, that we have 4 different classes. But
no.
The concept was the same, that we had put it on an Excel sheet and pretty much mimic the RP forms and had the Excel do the calculations for us. And I like the first one and the second one, as I said before, are Nassau County ones. The third one is a 2-county situation, and the fourth one is really Laura's, which is a 4-county, 11-town situation, which upstate people could probably use that as a template and fill in their own numbers and situations.
I'll tell you, Grace and Laura and the rest of our audience, I think one of the things as school business officials that we all face are the criticisms of rising taxes and how we can best control those taxes and who's to blame for those taxes. I know here where we work in Nassau County, the question is always who's responsible for the tax rate, the school district or the assessor. And I think as school business officials, we always have to be in a position to always justify our tax levy, but at the same time not take responsibility for issues outside of our control. And the assessment of property is clearly outside of the control of a school district. However, we do tend to get the telephone calls from taxpayers when their taxes go up higher than the amount of our property tax levies. We all communicate to our constituents how much our tax levy is going up, but here in Nassau County, because of shifts between the different classes of property, that actual percentage increase in taxes over the last couple of years has been higher than the actual levy-to-levy increase. And the reason for that, and you can actually see that in a school district that, again, is located in more than one township or municipality, the individual township or municipality, if the value of property in that area holding everything else constant is going up faster than the other, if the district is located in 2 towns or in 3 towns, if it's going up faster than the other town or the other 2 towns where it's located in 3, that particular town where the rising tax levy, the rising values are going up, will have an increase in taxes higher than the publicized levy-to-levy increase. And again,
right.
You have to be able to explain that. And when I tell you that you have to be able to explain that, I don't mean for anybody to blame another area of government. That's not what we're here for, and we certainly don't want that done to us. We would not do that to our fellow taxing authorities. However, it must be known, and you must educate the community that although we do provide the tax levy, and the reason in many instances that people's taxes do go up to a degree, it is the result of school expenditures and budgets going higher, but the individual tax liability is only one part of what we're responsible for. The assessment practices in that particular jurisdiction also play a significant role in how much of each individual's tax liability is going to be.
John, you're 100% correct. Because we go through so many municipalities, that's a question that comes up year after year into my office. And this year when we presented and did our budget hearings and presentations, we were trying to be very clear to our communities that when we talk about a levy increase, we are talking about the revenue increase, not the tax percent increase, because that percent increase is a factor of many other items out there, the assessment, the equalization rate. You can look at my one spreadsheet and you can see right in the middle, green became full valued assessed. So they went from an equalization rate of 51 to 100%. So in a year where, unfortunately, my community was dealing with a very large tax increase of over 10%, when you look at their rate per thousand, it actually went down. But that was because more of the value was being claimed to be taxed. But when people look at this on their bill, it is a confusing concept for them, and it is something that people need to be able to understand the formulas of what drives these numbers, and it's difficult.
It's very difficult. I believe because of the economy and depressed real estate values, a lot of people saw their assessed value go down. As you just pointed out, people's value went down, so they cannot understand why their taxes are going up. So what tends to happen, as we try to explain to the public, that we don't fix the tax rate. We provide the tax levy that gets divided into the assessed value. So what happened here in Nassau County, and I imagine it happened in other areas of New York State and probably throughout the country, even though a person's tax assessed value went down on their home, out here it was going down anywhere from 10 to 20% because of the significant increases in property value 5 or 6 years ago. The tax rate had to go up to raise the same amount or more of taxes. So if your value upon which you're raising taxes is dropping down, then your actual tax rate has to at least go up to at least get the exact same amount of taxes that you raised in the previous year. And for most of us, because of rising costs, and in most industries, in most businesses, and the school district is a business, you would see budgets going up and other revenue sources going down. More and more is being put out there for taxpayers to have to pay. So what happened here in Nassau County, assessed values went down, but the actual tax rate, when compared to the one the year before, went up significantly to make up the difference in value that was being lost. And another thing I want to point out to the audience is, as school business officials, you will get letters from possibly from industrial development agencies in your area of hearings on whether to provide payment in lieu of tax agreements to these entities coming in and settling in your community. I think it's very important that as business officials we stay on top of that, because if we have a significant parcel of property taken off of our assessment roll, that the taxes that particular parcel paid in the past, depending upon how it was assessed, now has to be assumed by the remaining taxpayers. So as a voice of your school district, I think with the permission of your Board of Education and Superintendent, you should attend those hearings and voice your concerns on your industrial development agency's overall plan, which in most cases is a good plan. They're trying to draw businesses into the area. However, if it will adversely affect your taxpayers, you need to go down and voice that concern, because again, the interest is to bring in new taxpayers. The more taxpayers that you have, the more you're able to spread your tax levy over. However, it's it's a fine line because you got to be careful. If you build too many new homes, that's going to generate more students, and then you may have to go out and build more schools. But just staying on the subject of property taxes, you would like to see hopefully some commercial properties coming in, industrial properties coming in to your community, which will help you spread out your tax levy to other taxpayers, which will in and of itself, if enough new value comes on, will lessen the burden to your existing property taxpayers.
Right. The only thing I'd like to add to that, John, is be careful, too, with these pilot agreements, these payment in lieu of taxes, is their assessment, the assessed value of the property won't be reduced. Their taxes is changed through this agreement, the payment in lieu of taxes. So I know of a school district in which that had an adverse effect also on the state aid they received, because the district was considered a very land-rich district because it had this industry in it from when the state was looking at state aid at one point. But yet they weren't receiving that income from them as a tax levy because the community had made this payment in lieu of taxes agreement. So it was really kind of a double whammy for the remaining residents of the amount of the burden they had to pick up. So John is absolutely right. The hearings for those pilot agreements are very important. That school is represented at those, and those numbers are looked at very closely. The only other thing I'd like to mention to the group is with the STAR forms, during your tax collection period, here in upstate, we have a number of people who will have their assessments changed. Many people will get their STAR exemption after the bill has been calculated. And they go down to the county and they refile. The county readjusts their assessment, and the school district then has to recalculate the tax for that property, which is often they're taxed less because they've now got the STAR exemption, which when you originally do your forms are not accounted for. So it's very important that you keep a worksheet and track those changes, and first that you file amended forms with the property for these STAR forms, because in this last school year it amounted for my school district to be over $5,000 of additional STAR money. And every penny is counting right now that we were able to get additional money back from STAR. So these forms are amended through the year as you're having some changes within those assessed values as people pay their taxes.
That is very important, and just to get back to the determination of the tax levy, some of the items to watch. Again, the tax levy is the plug number in terms of financing budgets going in your new fiscal school year. One of the things you have to be careful about, and I imagine everybody is monitoring their other revenue sources very closely. I know in the last 2 or 3 years, I was a little too aggressive in my estimates of interest income. And I actually thought that interest rates were going to go up slightly, and they actually didn't. And the projected number I had in the revenue budget for interest income came up significantly short. However, in addressing that, I had been very conservative in other revenue categories, such as outside tuition from other districts and continuing education tuition amounts and also pilot agreements. Very important to stay, again, as Laura pointed out, pilot agreements, watch those. They do run out after a period of time, and what will tend to happen if you're used to plugging into your revenue budget a certain amount from your pilot each year, just make sure that that pilot will still be valid in the coming fiscal year. Also, with the outside tuition numbers, you want to make sure that you've got a commitment or close to a commitment from other school districts sending students to your district, because depending upon how much of your revenue budget is being financed by outside tuition, that could be a significant drop off in revenue for you. And what will happen is, once you set that tax levy and turn over that levy figure to the taxing authorities, you don't get another shot at raising money from that revenue source. So you have to be fortunate enough to realize more revenue, hopefully in some of your other revenue codes, than you had anticipated, because let's face it, when we do our estimates for a budget in the spring, we're estimating what's going to happen for all intents and purposes, September through June, which are 4 or 5 months away. So we have to be conservative in our estimate of revenue sources, because once we set that levy in August, which is, for most of us, property taxes are our number one revenue source, that's it. If they come up short, either another revenue source has to make up the difference, or you have to go to your expenditure budget and curtail expenditures on that side, and that's not a conversation you want to have to engage in when planning is taking place based on that level of expenditures when your budget was approved, hopefully that third week in May.
Now, I'm not sure if downstate is the same as by usually around November 15th, the counties will also send out some forms and want information as to the parcels or the taxes that were not paid. And that information is very important that you get that information back to your counties, because that is what they're going to use to for upstate. The school taxes are then levied on county tax bills, which come out in January. So that is very important that your information is accurate, that you're giving to the county, because people will receive additional penalties onto their county taxes for what was not paid in their school tax bills. Then the county makes the school districts whole by April 1st. We receive checks from the counties for those portions of school taxes that were not paid. The burden's then turned over to the counties to go after the uncollected school taxes. But again,
Laura, prior to that, upstate, you are the school district is the one that's responsible for collecting the taxes, which is different than what we have down here in Nassau County.
Okay.
Yeah, we're made whole by the county for any delinquent taxpayers about before June 30th of the school year. What happens is, as Grace pointed out, it's a little different down here. 100% of our levy is given to the school district, which is great for us. Not so good for the county, because they have had to, because of their particular economic situation, they've had to go out and borrow in many cases to pay the school districts for those delinquent taxpayers, and then they have to enforce real property tax law by going after those delinquent taxpayers. So we are very fortunate that we are able to get 100% of our levy, and we also, as a revenue source, and I imagine it would be the same in Upper New York State, in the outside of Long Island, we also get interest income from our receiver of taxes for that period of time when they collect the taxes before they remit them over to the individual school districts. So we will receive a check sometime around the second or third week in July of every year from the receiver of taxes for interest income. The receiver of taxes made proportionately on the receipt of taxes for our individual school districts, which I must add has been declining also because the same interest rates that we're subject to, so is the receiver of taxes. So two significant revenue sources that we have come to rely on, interest income on our own deposits and investments, and the interest income from the receiver of taxes on the receipt of taxes has significantly declined over the last 2 or 3 years, requiring either other revenue sources to make up the difference or the property taxes to go up or cuts in expenditures on the appropriation side of the budget.
Yep, very similar, very process. The school districts upstate do their collection to a period of time. It is turned over to our counties. And we also do, for that time period of usually from January to April 1st, we receive some interest in penalties that the county will collect when they're able to collect those school taxes. But we are made whole, too.
Good, okay. Guess there are no more questions, unfortunately. The only other area that I would like to speak on, of course, is state aid, which is a significant number for a number of school districts, and for those people tuning in today to be on top of your state aid claim from the previous year and what's taking place during the year. When we submit our SA 100 and ST3 at the end of the summer, we estimate what our student counts and some of our expenditures are going to be the following year, which the legislature and the governor base their state aid packages on for business officials to be very careful in those estimates, because based on what you put in there, you're going to hope that you realize or you make the numbers that you put on those estimates, because if you don't, because they're estimates, you may have a inflated state aid figure that you may be under pressure to put into your budget literature, because the number gets publicized in the paper, and your taxpayers, the people in your community, are going to want to know why you're not putting the figure that was communicated in the paper in your budget. And you need to be able to defend that, but on the other hand, you don't want to be in the position that the state aid figure, as we pointed out in this example, when it went from $2.5 million, I believe, to $1,750,000, you don't want to put in a greater state aid number than you have a chance of receiving. And it's very important to continually look at the state aid website each month to make sure any audits or changes in your submission, whether they're increasing or decreasing your state aid figure. And you also want to, even though the estimates get frozen, I believe as of December 1st, for certain databases in terms of the state aid figures that get publicized in the spring, you don't want to be too conservative, but you want to be conservative on those state aid figures, because you want to reasonably be able to estimate what you're going to get in state aid, because it does have an inverse relationship to your property tax levy. And the more money, of course, you can get from other revenue sources, the less that you have to burden your homeowners and businesses with in your community.
Another excellent point, John. For upstate districts, the two areas I watch very closely after I've done my initial ST3 submission is we have BOCES, to which we are buying cooperative services. So I'm watching my BOCES expenditures, because that will be a state aid revenue line for me in the next year, as well as my transportation number. We've had for my district, some significant changes within our transportation department, which has changed those expenditures, which will change my transportation revenue. Those are two areas that I think for upstate districts can fluctuate, and I think it's two revenue lines I would hope people pay attention to and are aware, because it is true, the public's becoming very educated as to school districts and how they're operating and what they have, and it is an awkward situation if the press comes out with a number that is different than what you have, that you are able to justify that difference.
Yes, I agree. And I know we talked about it, but again, I want to caution our listeners that they are to submit their tax levy in its gross number. I know most people know that, but we never want somebody to make an assumption on what they think their STAR reimbursement is going to be and only issue a net tax levy number to the taxing authorities, meaning you come up with a gross tax levy, which is the number you must submit to the taxing authority, not the number you expect to get in taxes less, not the exact amount you expect to get in taxes, because again, the state provides the exemption. The exemption comes off of the individual taxpayer's bill, and the state pays the state reimbursement directly to the school district, which
Correct.
makes the school district whole. Just don't want people to, not that I've ever seen this happen, but I often wonder. One time I was completing the forms, and I was putting out the budget brochure in another district where I was working at the time, and for some minute I had at one point I had a lapse in my thinking. I said, gee, wow, I know the STAR reimbursement this past year was worth this amount of money. Should I show the tax levy based upon what we're actually going to get in tax money and not the STAR reimbursement money? And I realized, again, that the STAR reimbursement money gets paid to the district directly along with the net tax levy, making the district whole. But in terms of the school business official and the school district, they must report the total levy to the assessed value and not factor in STAR. Even though you fill out the STAR forms, the number you submit to your taxing authority is the tax number that will balance your budget on the revenue side of the budget.
Yep, that
Very
gross
important.
number, the gross.
Yes, very important.
Yep.
Very important. Never to put a net number in it. Is the gross number. Whatever your expenditure budget is less your estimate in revenues. That's what your net tax number is. You should never, ever factor in your STAR reimbursement. The number you give to your taxpayers is, the number you give to your taxing authority is your gross tax number. And the STAR is something that the state of New York gives on behalf of taxpayers. But in terms of the amount of money we need to raise, it is the gross number. I hope that was clear. I didn't.
Nope, I think you're
Okay.
very clear on that, John.
I realized that I had one more power slide. I'll just show it, although we covered everything on there. This, again, is going back to the forms that are attached to the webinar when you sign in. And I'll just go over quickly again, like I had numbered them 1, 2, 3, and 4. The first one is something that I just want to show you the next page. We have our contact information also if you need to ask any questions on the specific spreadsheets that we included. The first one was prepared by Anthony, and he also prepared the entire PowerPoint for us today. So if you have any questions, particularly on that spreadsheet, you can direct them to him. And the second one was mine. And again, I'm just saying that these are the two that we use in Nassau County. Laura prepared the fourth one, actually, which is the one, and they were all labeled as 4 counties, 11 towns, so you'll know that that's hers. And then Paul Defini prepared the third one. He's the one down here in Nassau and Suffolk County that rides on 2 counties. So anyone that has only 2 counties, they can refer to his spreadsheet. And John was kind enough to join us today to help me with this presentation, and so is Laura. I really don't know if there's any other questions. I think we might be able to turn this back over to Stephen if he's still online with us.
Yep, still here.
Okay. We don't see any other questions coming up on the chat room.
Michelle, do we have anyone waiting for questions on the voice line?
Well, let me give them instructions.
Oh,
Ladies and gentlemen, for those of you who would like to ask an audio question to any of our speakers, please press 7# on your telephone now. You'll be placed in a queue in order received. Again, 7# on your telephone to be queued up for audio questions. Thank you. And we currently have no audio questions on queue.
All right.
We've got a couple of minutes here. If you have anything that's pressing, if you wanted to send in the chat or go ahead and dial in to get into your voice. While we're waiting, let me ask presenters one question about this. Early on, you'd mentioned about the difficulty of trying to explain what role districts have in determining what the taxes and the tax rates are going to be. And the efforts that you make to try to do this. Have any of you actually worked with your assessors to try to put together a public, either a public meeting or a town-to-town kind of rolling kind of media event or something where everybody's at the same place where these questions can be answered? So, and I know it's difficult when you have so many assessors, but that are involved in the process. But the best practices, particularly for new people who haven't coordinated these things before, and how to react to those questions. Is there any best practices you can share with people about how best to communicate that message to taxpayers when those questions arise about responsibilities, and have them understand without having to explain yourselves equalization rates, which is essentially trying to explain quantum physics for somebody that doesn't want to know anything about it?
I'll tell you, Steve, it's John. In a previous job, we had undergone a residential reassessment in Nassau County back in the year 2000. I think it was year 2000. One had not been done in 62 years. So what we did see was a great shift in value from classes 2, 3, and 4, which were condos, co-ops, apartment buildings, and special franchises, retail and commercial property, into class 1. So what we did in a previous job I was in, we at one or two of the budget presentations, we kind of gave a historical review of what happened with assessment over the last couple of years, so people would understand when they saw their property taxes, actual individual bills being higher than the actual amount we were raising our levy, they would have some point or some explanation on why that was happening. And we did that proactively because of the fear. We didn't want people to feel we were misleading them, that we were telling them one number, yet the actual number they were forced to pay the percentage, as a percentage, was higher than the number that we had been publicizing. So what we did in order to come up with that study, we obtained materials from the assessor's office, but it was pretty straightforward, although a lot of taxpayers were not happy with the fact what happened. But the way we kind of made the explanation, and I would encourage my fellow business officials to do that, get a couple of samples of tax bills. And a lot of tax bills will actually put on the tax bill what the home is worth on a full or market value. And what you should do is ask that taxpayer, because most of the time assessment practices lag about a year and a half behind what the actual market conditions are. So you would ask the individual, and they would call in and complain about their taxes, and rightfully so. I mean, depending upon the economy and where people are in terms of being employed, if they're really watching their expenditures, and most of them are, when they see their property tax bill rising at a higher rate than the consumer price index, they're alarmed by the number. But when you get them on the phone, and believe me, this is a straightforward question to them, you ask them, is their home actually worth as much as it says on that tax bill? In most instances, they will tell you their home is worth more than that. And you will tell them at that point in time that they are not necessarily, even though I know it's going to be difficult for them to accept this, they're not even being taxed at the value their home is actually is in that marketplace. And believe me, although they may not be happy with your answer, they're kind of proud of the fact that their home is worth more than it appears on that tax bill. But getting back to your question, I think it's important to educate your community as much as you can, to the extent you can. I mean, we're not assessors. We don't go out and employ assessment practices, but to the extent that we can without embarrassing our assessor's office, we can explain our piece of the tax puzzle and their piece. People will have a greater understanding that it is not entirely the responsibility of either the tax assessor or the school district. Each one of us puts in an important component of the calculation, and the only way for that to happen is if you can get the permission of your Board of Education to go out and have presentations on what we're responsible for and what the assessor's office is responsible for, and to the extent that we can, get the assessor's office involved with that also.
Yeah, and I think that you've covered everything there, John. You hit a couple of obvious points, but one is that the taxpayers and homeowners don't like to be told that they're not paying their fair share because of what the numbers are involved. But on the other hand, you pointed out that in some ways that they do like to see that that their home is worth more than what's written on paper.
True.
But that I think that probably the primary tool that you have to work from, knowing that you can't have all the assessors come out and sit around a table and have all the property taxpayers out there attend one meeting where everybody's there to explain their role, is that tax bill. And to the extent to which the school districts can understand and know exactly what people have in their hands, which is basically prompting them to make that phone call and start in a very systematic and simple way, is to say, here is what we can explain, here's what we can control, and actually knowing that and building that into the budget presentations, we found has been something that is as proactive as you can get, and stems some of those phone calls in August and September complaining about why the district raised their taxes above and beyond what they thought they were voting on back in May. So that's the huge challenge, and that's something that's part of the job, as everybody understands. But to try to make it a system and address these questions in a way that no one feels they're caught off guard is very good. So I would just take the advice that you've heard from these presenters and try to come up with answers based on that document.
But I'll tell you another thing also. We as homeowners ourselves in our own communities, when you see people with illegal apartments, possibly running businesses from their homes, and I mean, nobody likes to encourage people to alert the authorities. However, there are different assessment practices for commercial enterprises and retail businesses and multiple dwellings. And when you see somebody in a zoned area doing something that's outside of that zoning, I think it's incumbent upon you as a responsible citizen to report that to your assessing authority, because you are actually picking up a share of that person's taxes. And I know people may frown upon that, but it's important that everybody does pay their fair share of taxes. However, if the taxing authorities don't know that a particular business operation is going on, they may not have that particular home or dwelling or buildings assessed correctly, and nobody, like you made a good point, Steve. Nobody wants to be told they're not paying their fair share. You're absolutely right. And again, I have to be careful in those conversations with irate or any taxpayer. However, if you do see activity in a neighborhood in a home that's zoned as a residential home, and the person's running a business out of that home or has 2 or 3 apartment dwellings in that home, I think it's incumbent upon us as responsible citizens to report that, because that building should be paying more in taxes, which, if that gets reported more, then people's taxes will be more equalized. It'll be a more equitable system, and I think a lot of that in certain communities is going on and is going unreported.
Yeah, I think you would hope that the assessors would pick up on that before that the business officials would have to, but sometimes you are the last defense in the eyes and the ears of a lot of this stuff, and have, in a sense of fairness, the ability to make that, known to the assessors. I agree with you there.
We have a question from Mary Gibson. Is the tax warrant amount stated net of star?
No, it's stated it's gross of star. It's gross. That's what I was trying to make a point of. Never deduct the star money from your tax levy. That's something you don't control. You have to make sure that the taxing authority gets the exact amount of taxes you need to balance your budget. Do not make the mistake of reporting your levy net of star. I'm sorry if I was confusing on that, but that is very important, that your tax number does not factor in the star reimbursement. Do not make that mistake.
Okay, thank you. Michelle, do we have anyone on the lines for a question?
No audio questions on the queue.
Okay, we'll give this one last chance for anyone who has a question to type it or call in. Presenters, do you have any final words? All right, I guess that'll do it for today. Thank you, everyone, for coming, and we hope you took something useful away from our seminar today.
Thank you.
Thank you.
Thank you, everybody.
Ladies and gentlemen, this concludes today's New York State ASBO webinar. Thank you for attending.